grant us understanding in Jesus' name. We also pray for our speaker that you will grant her utterance in the name of Jesus. We pray for all our sisters who are yet to join, that Lord, you will remind them by your Spirit and have them join so that they can learn and be blessed along with us. For in Jesus' name we have prayed.
Amen.
Amen.
Amen. Thank you so very much. And I think we dive right in. So good evening, beautiful women of purpose. I can't see your faces, but I know it's ingrained in my spirit that every one of us is absolutely beautiful. So good evening, beautiful women of purpose. Welcome to another Wisdom Packed TOCI session, even if I say so myself, brought to you by the education team on behalf, of course, of the convener and the whole of TOCI. Right, so TOCI is a place where we don't just go spiritually, we thrive practically, and it is one of those sessions, right? So tonight we're diving into a topic that's both spiritual and strategic, managing personal finance. In fact, when I was thinking about it, I was like, this sounds like a talk show. Managing finance with Foluke. I thought that's fantastic. So please, Sister Foluke, go right ahead and patent that. I think it's going to be fantastic. Right? Why is managing finance so important? Because we want to be virtuous. We want to be like the Proverbs 31 woman, Proverbs 31 woman with Proverbs 21:20 wisdom. So just go check it out, right? And we can't be that if we don't know where our money is going. So it's a really practical one today, and we're really blessed to have with us Sister Foluke Aboderin, a seasoned professional, a kingdom woman, and someone who believes that money is not just for spending, it's actually for stewarding. So I'm going to read her profile in a minute, and it's for each and every one of us. So whether you're earning in millions or whether you're just managing a small budget or a modest budget, where you're being very prudent, tonight is for you. So grab your notepad, open your heart, and let's shift from surviving to stewarding our finances. So our speaker for today is Foluke Aino. She's a strategy and transactions consultant. Ooh. With over 6 years professional experience across top consulting firms in Nigeria and currently in the UK. So she's worked across different business areas, including business strategy, financial modeling, valuation, and due diligence. She had an undergraduate degree in geology, interestingly, at the Obafemi Awolowo University in Nigeria, and holds a charter from the CFA Institute. Foluke is passionate about expanding God's kingdom, building generational wealth, and contributing to the development of healthy, wholesome individuals and relationships. She participates in various volunteering programs, including diversity, social mobility, and environmental sustainability. Outside of work, Foluke likes traveling, fitness, food, watching TV shows, comedy shows, attending concerts with friends, and reading good fiction books. Fantastic range of hobbies. Foluke is happily married and lives in London in the UK. So without further ado, ladies and ladies, I present to you our very dear sister, Foluke Aboderin, who will be taking us on the topic, managing personal finance. So Sister Foluke, thank you for being with us today. We'll turn the floor over to you. Let's go share around maybe 35, 40 minutes so that we can take questions and hopefully make this as interactive as possible. And ladies, please let's have your question in the chat. I think it's an interesting one. I'm literally grabbing my notebook because, yeah, we have to make this money rain, right? Sister Foluke, over to you.
Thank you.
And
Thank you
welcome.
so much, Sister Fair. Thanks for the intro as well. I have to say it's an honor to be here. I'm glad that I have this privilege to be here to share my own, a bit of my knowledge and what I've also learned as well. Like the topic I think is such a important one, and it's just something that everyone like wants to be, especially now, it's just like a very important topic. So without further ado, I'll just start sharing my screen and then take it from there. So let me just try and share. Okay, got it. Okay, I'm hoping everyone can just see the screen right now.
Yes, we're good.
Okay, good. So yeah, so managing personal finance, I have to give some context to it. Like Sister Ife read my bio, and I've mostly been like for work, I do like corporate, what we call corporate finance. Personal finance is actually run on similar principles to corporate finance, like fundamentally. So what makes a successful business? You can kind of co-opt that into your personal finances as well, and it will work. So I'll just step into today's agenda. So it will be we'll mostly be covering four things, or three things rather. The first one is financial stewardship, which is really a mindset. That's like the fundamental mindset thing about money. That's like basic. First, I think mindset is most important when you're thinking about money. Like, because mindsets would shape reality and all of that. So I think it's quite important to have the right mindset when dealing about money. Then the second thing we'll be covering will be intro to personal finance, and then also investing basics. So I'll just like to say that I know a couple of things that I might mention today we might be familiar with or we know, but I think we should still keep an open mind and still be open to learn. Because even there's some things that I literally learned in the last year and they've just quite been useful. So I want us to just have an open mind to what we're learning and as we go on. So I would like you to first indulge me. So I have a mentee question here because I just want to gauge for the people that are on the call where we are in terms of like finances. So if we so there are two ways to go about this. We could either scan the barcode or have this in the chat, the link in the chat. So I just want to gauge, and I'll have to actually flip my screen to the mentee question so I can see responses. But let me just know if everyone is able to scan the barcode and get the link. Maybe a thumbs up or some sort of reaction would be good. Okay.
Sis, can you copy the link and paste in the comment section?
Okay, let me do that.
Thank you.
Okay, so I've just done that. Now, please let me know if we can try. And let me just flip my screen to so we can see the question and the responses. This. Okay, so the first question we have here is for people that just joined. There's a mentee link in the chat that we're just trying doing like a quick polling question. What is one word that describes your relationship with money? And I know like for a lot of people, when you even hear money, it can evoke certain emotions. Sometimes it can be touchy but I just want us to just put into words what would say, oh, good. That's nice. Or maybe think about it this way: if money was a person, what's your relationship with it? That's another way of kind of looking at it. Okay, I need more money now. What I like that. Wow. We have some big fearful respect. Okay. I'll just allow people to share some more, and then we'll go on. Okay. Let's keep it coming. Use as many words as you like. Mutual. I control. God, I beg. Okay. It needs to match up quick. Okay. All right. Okay, so I think we have a number. It'll be good if more people can get in because there's one more question as well that we need to answer. So let's see. Good, but I need more. Fair, sensitive. The God I beg is making me laugh. Freedom. Okay. That's nice. So, okay, 70. I think we have a good number. So we're waiting on the call. Okay, so I'm in charge. Yes. So the thing with these words is it can either be like a positive or a negative. But I think what's most important is that we are self-aware of where we are with regards to how we see money. I think that's the first point, is like, how do you see money? And I think that's like what's more important, just acknowledging where we are, because that's why we're all here. Like, if it was, we all need to learn something. Oh, answers many things. We all need to learn something, and then yeah. So I think that's a good response. I'll just go to the next question, just off of this one. Now that we have some words to describe our relationship with money, the next question I want to know is, like, what's your money personality? And for people that are not familiar with money personality, there are maybe like tests that you can take online, but the basic ones are like, you're either a saver, you're either a, and let's not put our aspirational money person, let's put our your real you. Let's put our real self. So you're either a saver, a spender, or a what you call builder. So savers would, like the name implies, you'd save for rainy days. Spender, you spend money, and then there's less people that is more interested in like investing and all of that. So if we can just put in our money personalities. Okay, we have spenders, we have less build. Okay, I'll just wait for a couple more responses, then we'll move on. Okay. Spender. Okay, okay. I knew that we had a lot of ballers on this particular. Okay, so the spenders. I'll just get like maybe 2 more responses, and then we'll move on. It's the same link for anybody that just joined. There's a Menti link, and then you can just put in your answers there. Okay. We have about 20. If people can just participate in this, because it's good to kind of just acknowledge what our fundamental makeup is. Okay, I think we have a couple more responses now. Okay, so what I'll just say is there's no right or wrong personality. It's more like everybody needs traits of the other person to be truly whole. If you're a saver, there's some merits to it, and then there's some areas of improvement. Same with spending and less build, and the build as well. But it's just something to be aware of, so you know what to work on and what to be mindful of. So that's the essence of just this test and this personality. For instance, I'm personally a saver, but at the same time, it's important in dating as well, because sometimes opposite attract, and you can be a saver married to a spender. But the balance is good, because there's some downside to both personalities that needs to be balanced out. Okay, good. Thank you very much for participating in the polling. I'll just flip back to the presentation now. It's a good set of responses. Okay, let's make it bigger. Okay. So let's just go into it. I think so. The first thing, and I've mentioned this before, is the mindset about money. And fundamentally, the belief is that we have to believe that everything we have belongs to God. And what that mindset does is it removes the anxiety and the restlessness attached to both the pursuit of money, the acquisition of money, and the sustenance of money. I've put in some Bible references here that just further reemphasize that God actually owns everything. The earth is the Lord, the silver is mine, the gold is mine. And fundamentally, if we believe that we are stewards, then we also believe that to be a good steward, you have to manage the resources you have well. and only when you manage it well would more be given in that sense. So that's how we should view money. It's like it's something that is in our possession, but it belongs ultimately to God. And it also makes it easier to obey certain instructions. Like if you have to like give, or if you get instruction and you're led to give, it makes it less difficult to do if we have this mentality fundamentally. So now that we know that like we're stewards, I think what we're going to move on to now is how to actually manage the money that is in our care. And that's what personal finance is about. It's about stewarding resources. And I've put in 3 things that I think are just key, that the building blocks of personal finance. And people, you might have seen this in different variations of it, but ultimately, like the fundamental things are still the same. There's going to always be some element of budgeting, protection, and investing, and we'll dive into each of these as we go on. So let's start with budgeting. So this is one word that I didn't used to like before, because somehow, for some reason, and I don't know whether it's the way parents have used it growing up, it just signals like, okay, we are on a rationing restriction thing whenever we hear budgeting. But I've had a mindset shift recently, and is now budgeting has become something that, like, it's about actually allocating resources rather than it doesn't signal restriction or lack of freedom. It's about allocating resource. And one thing I wanted to also, as I was thinking about this topic, was that in the context of like companies, budgeting is actually seen positively. But when it comes to in our personal lives, we start to see it like something that, oh God. So we have to change our mindset about budgeting. That's the first thing. I just see it as an allocation thing. And it's just going to allow us to be able to meet whatever goals we want to meet. And that's what's most important. So even the Bible says in Luke 14 that if you want to, build a tower, you need to count the cost. So budgeting is all about planning, and planning is essential to whatever financial future we want for ourselves. And then I've put in a couple of things that like just to show how important budgeting is. So the first thing is financial control. And one thing about financial control, and maybe this is something people can relate to. For instance, if you're here and you don't actually know like your income and your expenses, that's something that we should start to pay attention to, because some people might not even know like all their sources of income and how that flows. You might have a flow from salary, you might have flow from maybe a real estate property. Some people even like get flows from, I don't know, maybe their father's farms or something, but those are income sources that you need to be aware of and just know exactly how much you're getting. And then on the flip side of it too as well, a lot of people might not know what the income is, what the expenses is. You just know what's left in your accounts. If that's how we've been living, that's not necessarily like the best way to live. It's quite good to know what goes in and what goes out. And that's where budgeting comes in. The second thing also is like achieving financial goals. We might have short-term and long-term goals that we want to meet. Sometimes it might be, oh, I want to go for holiday. That can be a short-term goal, or maybe a long-term goal can be, oh, I want to buy a house, or I want to retire. I always joke that I want to retire at 40, but based on COVID now, maybe 45. But those are goals that like budgeting helps to achieve those goals. Then third thing is budgeting helps to identify problem areas. There are areas where we might be overspending or underspending. I know a lot of people always think of overspending, but sometimes, and I know savers really, they're probably the ones that will have this issue of underspending on certain things. Budgeting helps you to see that as well. And then the fourth one is responsible spending. And then last one is financial independence. Now, financial independence can mean different things to different people, but at the core of it is to be able to achieve that, what you term as financial independence, there has to be some planning involved. It doesn't just happen. It takes planning, it takes over the years, and it takes discipline as well. So just moving on. So now that we know like the importance of budgeting, we want to just I want to move on to talk about how to start budgeting. And one of the first things, like there's a couple of bullet points I've listed here that can help start. And I also say that there's also there's a lot of resources about budgeting, but I think maybe one of the key things is to actually keep it simple, especially if you have a business. That's a different type of budgeting. But if it's like a personal budgeting, it's really just income, expenses, this is what's left. Like that's how simple budgeting can be. So the first thing is, I've mentioned tracking your income and money coming in, then making a list of regular expenses. So you have things that we call recurring expenses, like your what do you call it, your rent, your bills. Those are regular expenses on a monthly basis or weekly basis. Then the third thing you want to do is set financial goals. And then the fourth thing is categorize your expenses. And I think this part is really important because there's needs, there's wants, and I know it can be confusing sometimes people can, be a bit confused about what they need, what they want. So it just depends on where you are, but there are things that at least we can all agree universally that these are needs and these are wants. For instance, like something like food now, that's an absolute need. Shelter is a need, clothing is a need. So, and then things like wants can be, I don't know, maybe like going to see a movie or all of that. Those can be wants. And then everything else is like supposed to be your savings. And then the last thing is to make a budget plan. So there are numerous Excel templates that we can use to actually create a budget. You can find online. I have one as well that I use. I probably would share as well. But it's just simple budget. Doesn't need to be so complicated, but I think it's quite good that you have it on paper. And this budgeting, this is starting from where you are, not where you're aspiring to be. This is not an aspirational budget. It's like, today for this month, this is my income, these are all the things I've spent on, and these are my, this was left. So that's how to start. You have to start from like your current state. And then on the next slide, I don't know if anybody has heard of this, 50, 30, 20 rule. So it's like a popular budgeting rule. So this is now, whatever you have currently, the recommended kind of split is this 50, 30, 20 rule. So that's where you now start to kind of align your budget to this rule. And I'm sure there are other kind of splits, but this is like the most popular that people do use. So it says we have 50% to needs, 30% to wants, and then 20% from savings or debts. Allocate 20% to savings or debt repayment. That's if you have debt repayment. But one thing I also want to point out here is as Christians, I know not a lot of people believe in tithing, for instance, but we should actually be taking the tithe first, and then the rest of the money is what we then allocate 50% to needs, 30% to wants, and then 20% to savings. So even if you don't believe in tithing, I believe that we should have some percentage of money that we give to God's agenda, God's kingdom. Like Muslims do it, they have that allocation. Even some companies actually have an allocation for tithing as well, or giving, or percentage giving. So I think when we're doing our budgets, we should just keep that in mind as well. So that's the 50, that's all for the 50, 30, 20 rule. Okay. So I'll just move on to, so yeah, the next couple of slides is really just deep diving into what are needs, what are wants, and what should go into savings. So I would say for this needs part, I've mentioned like their primary needs, food, clothing, and shelter. But what the key point here is that your primary needs should not exceed 50% of your budget. And okay, for countries where, for instance, rent is annually, what will help is to prorate that annual amount into a monthly amount so that it can match your income. And then you can see whether it's actually 50% of your income in a month that is going to, all your needs. And if your needs exceed 50%, I think that's a case to increase your income. So you should be the short-term goal should be to actually increase your income at the very urgently. And I'm just grateful for, I think we've had a lot of trainings on maximizing our gifts and all of that. So that's where that comes in. But at the minimum, 50%, not more than 50% should go into your needs. So the next thing now is the wants. So these are things that we don't need, but we want, basically like wishes, like wish list, like enjoyment list or whatever. So we can use it for like travel or our hobbies or like, certain subscriptions, gym memberships, all of that. But again, yeah, if you don't spend up to 30%, then the rest will go into savings. And the caveat is, for instance, savers most likely will not spend up to the 30% in this wants portion, which is where budget is good, because sometimes we forget to enjoy life and you're just saving. So it's good that you have it's like, even like companies, if they have a budget for team launch or team, you will see them rushing to use it by the end of the year, that no, we have to use, I think maybe it's helpful for someone that has a saving mentality to have that kind of mindset as well, that, okay, I have 30% that I've not used. I need to find a way to use this. And then if not, we can always allocate it. But spenders most likely will exceed this 30%. So we see how we need to balance out. The last portion is savings. The remaining 20% should go into savings and debt. And debt repayment. So I think we've discussed debt before, but we just need to be able to, when we are doing this budgeting, we need to keep our debt repayments in mind, because if you don't repay those debts, they would build up and accumulate interest. So part of the goal is to actually take some inflow every month to be able to start clearing debts if you have them. But if you don't have any debt, then that's fine, because the entire of the pot will then go into the next step that we'll talk about. Okay, so the next step is protection. Of once we've gotten into the habit of like budgeting, and we have that 20% savings, there's a recommended amount that if our fund has reached about maybe 6 times of salary, that seems big. I think maybe even 3 times of salary, then we can now start to do like protection layers. And what does protection mean? It's mainly insurance and protection against rainy days, because economies can be volatile, things can happen. So we just need that extra cover to just make sure that we're in a good place still, regardless. So one of the there's like 2 main buckets for this protection. There's the emergency fund. So that's where you would we need to have about 3 to 6 months of living expenses at any given time, just to maintain lifestyle in case of any unforeseen circumstances. But there's also the insurance part, which is not talked about enough, but I think is very important. And I know we're reading the book of Job now, and it seems apt at this point, because Job lost all his possessions and all of that, but he also lost his health as well. So yeah, it's terrible situation, but if he had some form of insurance on his properties, at least that's one less thing to worry about. But obviously the children, the life of children, that one we can't replace, we can't recover it, but this is what insurance covers as well, just all these unforeseen circumstances. Health insurance, some companies pay for this, but if you're in a country like, I think UK, Canada have like NHS or social health, where you can always be assured of some level of healthcare. But if you're in a country where that doesn't exist, it's a good thing to put money into health insurance, because health is one of the things that can wipe away wealth. Like, you can budget, you can save, but God forbid, like, any bad thing happens, then health is like, would drain it all like so quickly. So that's why it's good to have some form of insurance. Then income protection, I think this one is relevant, but I think it's also more relevant, in my opinion, for like super earners. But it's like protection on your income. So if there's a job loss, for instance, income protection will guarantee that there's some form of income coming in. Might not be exactly at the same level, but the income will come in at least up until the point where you can get another job. So I think this is very important to have as well. And then life insurance, that's pretty explanatory on its own. Okay, so I'll just move on. So we have one more polling question. Let me just so I've mentioned we've done the first step, which is budgeting, then protection and investments. And then we have this one more polling question before I move into investments, actually. Let me try and paste into the chat. Let me try and paste. It's the same link that we had before. I'll just share my screen so we can do the polling. I just want to get a sense of where people are with investments before we carry on. Okay, great. So the first question is, do you currently own shares or stocks or as part of your investments portfolio? Okay, I'm saying yes, I'm saying no, I'm saying none. Yeah, okay. So nobody is not sure. That's good. Okay, there's one. Okay, yeah, that's good. I rate the not sure, because absolutely, I don't think anybody should invest in anything like they don't understand or don't know about. Like, that is very critical. Okay, so yes, just get a couple more responses before we move on to the next question. Okay, a lot of yeses. Okay, and this is like whether in Nigeria or in US stocks, like anywhere. Do you own stocks anywhere? Okay, I think that's everybody. So a lot of yeses. I'm curious, actually, for the people that said no, like, that means they know about it, but there's a reason why they've not started investing in stocks. Maybe I'll move on to the next question, and then maybe we can take some actual responses on why. So the next, some people have already answered the next. Have you sold any shares or stocks in the last month? Okay, so there's 2. And for context, I don't know how many people know about, like, follow global news and all this. So Trump has raised tariffs, and then the markets have gone into chaos, and there's been a lot of uncertainty. And it's across markets. It's not just affecting US, it's affecting UK markets, it's affecting Asia markets, affecting probably even African markets too, even though we're a bit isolated from all these things. But I just want to gauge whether we have sold. But I'm curious, why is it the number of people that don't own shares here compared to the last question is a bit high? Okay. I wonder why that is. Okay, are we getting any more responses? It's the same link, just a different question. For anybody that just joined, the link is in the chat. Okay, looks like we're not getting any more responses. Okay, so I've seen 2, I've sold some of my shares, 4, I've held on to them. I think it's a good selection of responses. One thing I'll just say, and I would flip back to the slide, is there's something to be said about investment and also like financial discipline. Because there's a tendency when markets are chaotic to sell. I would also like to understand the reasons why some people have sold their shares if they want to share. And then for people that have held on to them too as well, maybe if anybody wants to share, but I'll just flip to the next slide. Okay.
So, Foluke, if you can do another
Yeah.
maybe like 5 minutes so that we can have time for questions.
Okay.
We're
Yeah.
around about the 7:40. Thanks, ma'am.
Okay. So this is the last couple of slides. So investments. So one of the first things about investments is that first off, if you've not gone through the budgeting and the protection phase, I don't think you should really be investing. And that's like something that can be controversial to say. But the reason is because investment is for the long term. It's not something you should be thinking of. It's quick cash. I can just go in, go out. Except if it's I don't know, MMM or some Ponzi schemes. But if it is like the investments, like all the asset classes that are recognized and institutions invest in, it's not something you can do in the short term. So they said as a rule of thumb, it should be a bare minimum of like 3 to 5 years kind of horizon that you're looking at. So it means that if you don't have an emergency fund, that's 3 to 6 months of living expenses, then that should be the first priority before investing. So, and there are like 3 concepts that I think are quite good to know about investing in general because it guides how you invest. So the first thing is compounding. Compounding can sound complex, but compounding is really it's really exponential return. So think of it in that you invest a certain amount of money, it yields returns, and then what all the returns as well is also reinvested, and those now that's a bigger capital base that yields more returns. So as you can imagine, if you do that like over years, like it just adds up and it just multiplies. Someone like Warren Buffett is a popular investor that does like this has worked for. So he started investing at 10 years old, and I think it's like 80 now, and a lot of the multiplication in his money came when he was in like his 50s or 60s. So that's the magic of compounding, like the exponential returns of it. It's almost like the earlier you start, the better for you. And the next best time to start is also now. The second thing is pound cost averaging. So this is just the concept of, like, for instance, take the stock market, for instance, it can be very volatile. It can go up, go down, and some people even make a joke of, oh, buy the dip, but that's not the best. That also, like, you can burn your fingers if you're trying to like monitor ups and downs of markets. But this pound cost averaging is like a method of you put in a fixed amount at regular intervals, like fixed amounts monthly or weekly over years. So what it means is you take advantage of the downtime, the time it's up, and that just helps you get the advantage of the markets, like rather than just trying to chase like quick wins. So this is, and also research has shown that active investors, that's people that trade daily versus people that trade like passively and consistently, over a long period of time, they average the same returns. So, and that's good news to me because I don't want to be chasing the market constantly. And then there's also the third thing around diversification. This means that you spread your risk. So we'll go into the types of investments shortly, but it just means spreading your investment across those. And it can mean spreading your investment across currencies as well. I know for instance, people have some Naira investments and then some Forex investment as well. That's a form of diversification. People have you can have assets across multiple countries as well. That's a form of diversification. So that's always very important. I'll just move on to the next slide. Okay, so this is just a summary of the investments as the assets, but classed by risk. And risk is important because everybody has like some sort of risk appetite or risk tolerance, and it also depends on your lifestyle and age as well and other things. But these are all the classes of assets. I've just grouped them, and these are all the classes of assets you can actually invest in. So there's cash, there's bonds, that's low risk assets. People should not discount things like cash as well, because there's need, for instance, that emergency fund should actually be in some sort of liquid assets. Like, even if it's not cash, it should be in like a high interest savings account that you can withdraw from without penalty. And bonds as well, so very easy to liquidate. Things like their medium risk asset like real estate, ETFs, gold as well. That's medium risk, which can be like physical, actually buying the gold or buying some sort of ETF that tracks the price of gold. And then there's higher risk asset like equities, crypto, and startups. I did not put any form of Ponzi scheme because that's not an asset that can easily go under. And that for like it always happens, because I was seeing a tweet about this CBEX thing that just happened, and someone was like, if we all fell for MMM that time, how are people falling for CBEX? But it will always happen. Like my dad told me about Luspeco that they used to do one time. So it has always come and gone. So it's not the best asset. But one thing I wanted to point out on this side was the startups of private equity. There are small businesses that we can actually invest in or are looking for investors, but it just needs to be drawn up the right way. I think those can be really good, can have good payoffs. For instance, like companies like Facebook, they had early investors that are now billionaires or millionaires. So if there's an opportunity to invest in a startup and it's all legal and it's legit and you've done your due diligence, I think those are really great investments. And then I've just put in some useful resources here. I think, yeah, so just some books that I know: Psychology of Money, Smart Money Woman. I read that a while ago. That was interesting. And then in conclusion, I know we need time for questions, but I just want us to do like the 3 things about, let's just know one thing we want to start doing, one thing we want to stop doing, and one thing we want to learn more about, like with regards to finances. And then the last thing I'll end on is like discipline. Financial discipline is key. So I'll just pause here and allow Sister Rife for some time for questions. Yeah.
Right. Thank you very much. I love how you just went through that so smoothly, so calmly, so demure. Keeps people under pressure with calmness. Thank you so much. And I
Thank
think
you.
like, like people have said in the chat, the timing of this is impeccable. We put the month of April as financial month. We didn't have any idea that there was going to be any CBEX, but it's a good reminder, of what stewardship means. You can't put something on top of nothing, which I find is really what most of these Ponzi schemes are all about. So it's a good reminder to all of us as good Christian women, what not to do, and a reminder of the things to do. So thank you very much. I usually like to just go through what we've said, but I'm worried that will take away from time, for questions. So I'll just ask people to just put in the chat if you have any question you want to ask. Please put it in the chat or you raise your hand. We can take hopefully a few questions before we have to go. We want to be mindful of everyone's time. But I have a couple of questions here. And I will start from the very beginning. So, I like how you started with the 3 things to look out for, right? The stewardship, financial stewardship, talking about the money personalities, the introduction to personal finance, and then investing basics, which is really what you've gone through. I wanted to ask though, in terms of the money personality. So I always like personalities and differences, and
Hello? Oh,
Have you lost?
sorry,
Can you hear
is
me?
it just me? Yeah, I didn't get the
Is it back?
question. Yes, it's
Okay.
back. I can hear you now.
Okay, great. Sorry. I was asking about the money personalities, and I was saying that, I'm curious about personality differences in people, and I'm usually curious about what's informing that difference. So that's really my first question. So you said you are a saver. I know you talked about the saver, spender, the builder. You said you are a saver. So my question to you is, have you always been a saver, or did anything lead to it? So in a long way of asking why. What informed that? And it's just
Hmm.
me, my curiosity, yeah.
Yeah, I like
And can
that
you change your
question.
personality, your money personality? Can you change it? So that's a B part of the question.
Hmm. I mean, I think there's nothing you can change. Like if I start from there, but I like how you started the question about like psychology, because that's really what it is. It's psychology and conditioning as well. So I would
Mm.
say it's so the reason I'll talk about my parents a bit. My dad, when I was growing up, my dad lost his job at some point, and because it's something they were doing a merger, and then they let people go and all of that. So I can remember like a lot of frugality in the house, right? So
Mm.
it's like we're conserving everything, like even, and so I think events like that change you as a
Yeah.
person, because you now start to, even when there was now like some form of money, like it just seemed like I beg, no, we just need to, we can never go back. So I think that's where I got a lot of like my saver
Mm.
tendency from. And I think that your personality can change, or you can start to not change, but you can start to adopt traits from other personalities. For instance, my husband is a spender artist. So there's some traits that I'm like picking up from just by living, and but I think it's a combination of your conditioning and most likely your parents that like that's what makes up that
Mm.
personality. Yeah.
So true, so true. I don't want to go into my own story, but I think it's very true. But I
Mm,
think the calm or the assurance you have given me is that we can change our personality if we focus on it, so if we put in the effort to do that. So I'll
yeah.
just leave it at that. So ladies, I'm still checking if there's any questions in the chat. Please buzz. Let's take one more from here. Um, so next question would be, we're all Christian women, and even
Mm,
though, we live in a secular environment, so what are some of the common cultural beliefs or maybe mindsets that Christian women struggle with? What do you think? And how can we renew our minds around, since we're talking about the minds right now? What are some of the
mm,
common cultural beliefs or mindsets that Christian women in particular struggle with? What do you think? And
mm.
what can we do as Christian women to renew our minds around this? Yeah.
Okay. I think it depends on maybe not just Christian women or Christians in general. I think maybe one of the first things is depending on what like church you went for, like went to, like money was supposed to always be this bad thing that you should not want to acquire. Um,
Mm.
but and what's the irony of that is like money is mentioned more times in the Bible than any other book. Like there's always talk of gold and money.
Okay.
So I think that fundamental understanding that like money is something that as Christians we should aim to build wealth, because even God's agenda cannot move without money. I think that's one mindset. And then also as women, there's something about the head of the home being the sole source of finances as well.
Mm.
Because there's this scripture that everyone always references, that a man that cannot provide for his home is worse than an infidel. I think there's some mindset shifts that needs to happen, because I was watching a lot of like things about how historically men used to be like the highest earners, but it's kind of it's tilting a bit to like some sort of balance. And I hope it doesn't tilt towards the other side when most women now start earning more than men. But I think in light
Mm.
of that,
You sure I know that?
I hope
Anyway,
not.
sorry, let me not interrupt. Please go ahead.
I hope not. So I think in light of that, if we're recognizing the times that we're in, and we
Mm.
should also not be like have the mindset of like men should be making all the financial decisions in the home, for instance, because it will affect us as well. So there's that part as well. So I think those are the two beliefs I can mention, I can think of right now. Yeah.
I think great insight, really, because those are I think the things that people really struggle with, in all honesty, as Christian women. One is the um should I even have money? Right. I think we've kind of come out of that to a large extent, I think. And the second one is the dynamics. Is the dynamics around earning in the home. Fantastic. I think good question. One more from here while I'm still waiting for ladies in the chat, so I don't know if anyone wants to ask anything. Right. So a lot of us earn well. Most people earn well, but can still feel broke. Right. So where does the gap usually lie between income and actual financial stability? There was a friend of mine that used to say, I don't want to look rich, I want to be rich. Right. So where's the gap, between income and actual financial stability? What do you think? Yeah.
Okay, so I think, I can relate to, like, you can actually earn well and still feel broke. And I think sometimes what I've also noticed is, I won't call it black tax, but that also impacts, like, depending on where you are in your family and all of that. So there's like, apart from, so it means that compared to like your peers in maybe another country or something, there's added pressures on our income that nobody else would face. There's that as well. So I think in terms of like financial stability and earnings, I think what's key and how to get there is really through just this budgeting and consistently saving. There's a story of a janitor that they said he died and he had like 1 million or something in his account just because he was constantly buying stocks, like constantly over the years. So this is a janitor that was not making, he's not even making as much as anybody here, but was still able to do that. So I think it's that consistency of and also not, how will I put it? I think once you get to a point where you have enough money, then you'll be able to acquire assets that can generate income on its own. And that's when you're truly financially stable, not just financial instruments. Like if you have like a couple of stocks and bonds, I don't think that's financial stability yet, because it's not enough yet. Like until those are actually generating sustainable income, then that's the point where we can say we're financially stable. So it can be, we need to increase our income. That's one. And for career people, I know that you maybe at the 10-year mark, it starts to grow exponentially as well. It's like especially if you've been in the same career for a bit and you're growing in that career, a lot of people like 10 years in, that's where they make like, partners and start to get some form of profit sharing. So that just exponentially, brings it all like up. So that's where you kind of look towards. And then before you get there is growing your savings and consistently increasing your wealth. I think that's my answer to the question.
Yeah, it's a great answer. And I think, what underpins all of that is the discipline. The story of the janitor, the consistency, the deciding what to do and, doing it consistently. So it's really discipline. I know that's like a bad word sometimes. And another bad word you said earlier was manage. And I was like, I think it was Ifo that, but that sounds like poverty mentality. And even me, I thought when you say things like manage, it's, I think of it in the Nigerian context, which is scrimping and, trying to be stingy and just generally not having enough. Right. So how do we reassess or evaluate our mindsets around things like even just the word manage? Because when you say manage in Nigeria, it's not the same thing as manage in the global context. It means two different things. Yeah. So So what do we do about that? Because what we need to do is be disciplined and manage our resources. But if in our mind manage means poverty, then how do we resolve that?
I think it boils down to like the psychology thing again. Like maybe there's certain words that honestly the context they've been used is terrible. Like even if I hear budget too, it's the same reaction I have. or manage. So I think that it's what we're trying to say is you need to be able to allocate your resources well, and also invest them well as well. That's the fundamental thing. And also I think the other thing I was going to like circle back on, and it's a good thing you mentioned. So we had that question on the stocks, and I said who has sold in the last year or last month, and I asked that question because I wanted to gauge whether a lot of people panic buy and panic sell, and that's not good at all. Like if you check the trend of the stock market, it goes down, but it always goes up. So if you don't sell, you don't realize any loss. Like it can go to like minus whatever. As long as you don't sell, you'll be fine because it will go up in the next 2 years or something. So that's the discipline. It's like even now, like if you are taking like for instance that pound cost averaging that I mentioned, it means that even as the way the markets are now, you would still be investing consistently. Like it's just like an automated thing. I put in money every month and it is that. I'm not thinking about it. It's going there. And when I need money in like, I don't know, 5 years, 3 years, I'll look at it and I'll see what's there. So I think that's really what it is. Like it's changing our mindset about these words, or maybe using different words. If it's such a problem, like we can look for the synonym for like instead of manage, maybe we'll say how to steward resources properly or something like that. And one thing is, if it's a company context, we don't have issues with words like that. Like, yeah, a manager, like that's even a thing of pride. Like, yeah,
So true.
I'm a manager.
Very
But when
true.
it comes to like personal, like no, I'm not. No, you're a manager. It's a big thing. Yeah.
Okay. All right. So I guess we'll take just a couple more. We're at the 8 o'clock mark, so we can take just a couple more questions and then we can call it an evening. So you give us a good formula in terms of managing our personal finances.
Yeah.
Talks about the 50, 30, 20. Talks about how you should have a percentage that you save. Then after saving, you pay down your debt, and then you go into investments, right?
Mm.
So, I wrote down the question and I was like, okay, how do we navigate, as Christians, we tithe. How do we navigate tithing, giving, saving, all of that, especially when income is tight? So you've said we should have 50% for your needs. What if your needs exceed that 50%? I know
Mm.
the default answer would be like, okay, have increase more income, or get more income and increase your income, right? But is there anything apart from that, especially if you're not in a position to increase your income?
Name position. Hmm. I think that's something to think about, because the default answer, like you said, is like increase your income, because it's not sustainable in the long run if your needs are exceeding 50%. It just means like there's no even room for wants, not to even talk of savings, and then there's now fighting as well that we also have to think about. So I think maybe some of the things, and I also think it depends on like where we are in like life, in terms of like life stage. If this is somebody that is like maybe, I don't know, um so for instance, what I've seen now is like some people don't move out of their parent houses, and that's just because of this same, so that the needs will not exceed the 50%. So to just have that buffer, that's one option, or just like save until at least you can survive on your own. That's one option. I think maybe what other things can you do? I'm just thinking about it.
It seems like there's no one size fits all. It's
Yes,
for each person to look at their situation and get not just intentional but creative around it and see what
ex- ex-
works, what would
ex-
work for you. I think that's
ex-
what I'm
ex-
getting from you.
exactly. Yeah, yeah. It's
Okay,
that's exactly what it
I
is.
think fair enough. So
Yeah.
in the chat, they're talking about, don't mind them, they're talking about bags. They're talking about breaking bags and bags in China and budgets and all those. But someone mentioned something that is interesting, and I think you mentioned it as well, the black tax. Right.
Mm,
So the question is, what financial boundaries should we be setting in relationships? Both family
mm,
and friendships as Christian women. You even said something earlier, you have a saver personality, your spouse has a spender personality, so
mm,
should there be boundaries around that? When can that kind of dynamic become, become disturbing or become difficult, right? So what type of financial boundaries should we be setting as good Christian women that are,
Sure.
givers? What financial boundaries should we set?
Okay. I think it goes back to like that budgeting. So yes, we have that needs 50% and we have the wants 20%, but I think there's some nuance to that rule. That means that if you know that you have like certain financial responsibilities, it just means that maybe your wants will kind of reduce a bit because you just know you have more responsibilities to cater for. But I think there's something to also be said about like if you've said I'm going to save 20% this month, it just means that any any ask that comes that is outside of that, you should, I mean, you can wait till next month, hopefully. That's what you want to hope for, that you can wait till next month. Because there's a tendency to like overstretch and you don't have anything in savings, and you just like some people find that they're just spending a lot on like outside responsibilities and they don't have anything like to fall back on. So even that is not good as well. So that's the kind of balance you said, like, okay, um and some people have set aside money for charity causes as well, just in that percentage. It can be 5%, it can be 10%, and you just know that that is for like anything charity or anything unexpected that comes in. And I think it's healthy to have like a charity budget as well, because we should not just have everything for ourselves. There should be something that flows out as well. So I think if you have those percentages set from the start, just make sure you don't exceed it. That's the thing. No, however hard, and if you exceed it in a month, it's fine. The next month, just try. Budgeting is not supposed to be like I get it once. It's like you build it like an habit as well, and then that's what it starts to become. Yeah.
Okay. All right. So I think we're just about done. I'm really not seeing any questions in the chat, which is very interesting for our ladies. I just gisting, Sha. Say it's all right.
Yeah.
We thank God. So just one last thing, I think what what is, and I think you've touched on it, but I'll just ask anyway. What's one small but powerful habit that you can start today to build long term financial stability or clarity? What's, if you would say, because in your conclusion you said what's one thing that you would do, what's one thing
Yeah.
that you would advise that everyone does?
I think everyone should start. I want to say budgeting. Like there's many things, right? But if we're to start with one, I can start building that emergency fund. Um, yeah, have that emergency fund, because only then can you then start to now think of other things. But at least you have your basics covered. So yeah, I think build emergency fund, and then after then start doing all these complicated investment things. Yeah, or not so complicated.
Yeah.
Yeah.
Well, basically start with one.
Yes,
Start
start
just,
with
or
one.
just start, you know, and perfect it as you go on. All
Yes.
right. So thank you very much. I think it's a convenient place and time to stop. I'm not seeing any questions in the chat, but I will ask sisters, please, can you pour out your love and encomiums on us, on Sister Foluke for schooling us again this evening and drilling us with information, some of which we probably have heard before, but I think that this kind of information, you cannot hear it enough, especially if you're not actually doing it. Yeah. I will not look at anybody, just including myself, right? So just pour out and say a big thank you. So really, this has been more than a session on money. I think she started by calling it a call to stewardship, and I think that's what it is, right? And for me, the biggest takeaway is the beginning of this, when she said that understanding that everything is from God, right? Everything is from God. So do things his way, ask him, what to do, and understand that as his child, there's some level of protection and provision that we'll always have. So shouldn't be a fearful relationship, as it were. Right. And yeah, so as we close, we'll just ask everyone take time to reflect on what you start doing differently from tonight. That was the call to action from our speaker today. So are you going to create a budget? Are you going to create your percentages of needs, wants, and savings or investments? Or are you going to change how you think about giving and generosity and black tax? Whatever it is, just make sure.
Hello.
And
It's gone off
sugar.
again. Okay, yeah, you're back.
Am I back? Oh, is
Yes,
my
you're back.
headset though? Yeah, sorry. I was just thanking you for pouring out so richly and also thanking all the sisters that showed up. You all showed up for yourselves. And I'm sure you've taken away something from this. So until next time, from the Education Committee and all of TOCI will ask that to keep stewarding your life, keep
Do we
stewarding
get
your
the
gifts,
slides?
and keep
Sorry.
stewarding your finances to the glory of God. So we have the recording will go
Okay.
up on the YouTube page in a day or so. The recording will go up so you can get everything from there. So we
Thank you.
ask that everyone subscribe so you know when the recording hits, and you can go back and listen to not just this training, but all trainings that have come under the auspices of education unit and all other units. Really, I think we all have YouTube pages for all of the learnings. I see a hand up, which is
Yes,
Yes, I
interesting
wanted
because we're
to
kind of
ask,
done.
she had this
Yeah.
budgeting thing that she used to, the templates. I don't know if she could share here.
okay. Yeah, I'll share it. It's an Excel file, so I'll just share it and send a link to the group or something.
Yes,
Thank
we can
you.
also link
Thank
it to the YouTube recording so that anyone that goes there can perhaps download it as well.
Okay.
So both ways. So thank you very much. Thank you, ladies. It's been an excellent time with you as always. Until next time, stay well, stay blessed, and stay purposeful. Bye
Thank
all.
you
Have a good
very
evening.
much. Thank
Thanks,
you.
sis. Thanks, everyone.